The chimp likes to make a bit of noise and let the emotions out, but what's the plan here? You need to have a plan to be able to move forward. And plans, I think, are really important because they help you, usually for when you're in a wise, calm mind, to think about your values, think about why you're doing something, and feel like you know where you're going, and decisions that are thought through sensibly and according to the data. And the wise adult mind is much more calmer, is much more responsive, and is really can look at a long-term strategy rather than getting caught up in anxiety and fear and stress and worrying, which is the chimp brain. Biggest problem, I guess, though, is that the chimp hates uncertainty. And so that's where uncertainty activates the chimp. But of course, investment's all about uncertainty to a degree.
This is Wall Street Wildlife. Before we get to this week's show, a short word from our sponsors.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account 6% or higher yield that remains locked in even if the Fed cuts rates.
What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset's moving, so you can actually understand what's driving your portfolio performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares.
Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description. For an advertising-free version of the show, check out patreon.com/wallstreetwildlife. Welcome to Wall Street Wildlife with Christoph and Luke. Today, we are diving into the fascinating and turbulent world of investor psychology. Now, we all know that investing isn't just about crunching numbers. It's a mental game, a battle against our own emotional biases. And let's be honest, these emotions can wreak havoc on our portfolios. And with right now the chaos of trade wars and actual wars, the NASDAQ index is in correction territory. And in theory, that is great news for investors. But in reality, most of us, me included, are in a bit of turmoil and we're fearful our portfolios are going to fall. So with emotions riding so high right now, there has really never been a better time to remind ourselves about the importance of emotional discipline as an investor. Now, Christoph, this is something you and I talk about nearly every episode, but we're getting real serious about it this week. And we are delighted to be joined by one of my close personal friends and a truly exceptional guest from right here in the beautiful ski town of Chamonix, but working with clients worldwide, Zoë Ross. Zoë is a psychotherapist and a chartered counseling psychologist in training, and also, by the way, a fearless snowboarder. So she's definitely a master of her own emotions. Zoë, welcome to Wall Street Wildlife.
Oh, thank you so much, Luke. I don't know how to live up to that introduction, really, but that's very sweet. It's great to be here with you both.
He's just happy he doesn't have to talk to just me this week.
We've got a marriage counsellor on the show with us, Christoph. Perfect.
No, I don't do couples therapy. No.
We need some. He's been beating me up about my SpaceX investment. But so we are thrilled to have you on the show. And I know you've spent years helping people how to understand and manage their own emotions in a clinical setting. So today, we're going to explore how some of those same principles apply to the world of investing. We're going to tackle everything from the Chimp Paradox and the emotional roller coaster of market volatility to practical tools like self-regulation and mindfulness. We'll explore why risk tolerance seems to differ between men and women, and how everybody can improve their ability to take on good risk, not bad risk. We'll talk about how to manage the fear of missing out and also build the mental resilience and emotional intelligence needed for long-term investing success. So whether you're a seasoned investor or just starting out, get ready to gain some invaluable insights into the psychology of investing. Well, I'm looking forward to getting stuck in. But before we do, Zoe, can you just tell our listeners a little bit about you?
Yeah, of course. So I have a private practice, and usually in my private practice, I work with pretty high functioning, successful professionals who've had some kind of relational trauma usually in their lives. So they're looking to deal with that so they can move past it and continue to really thrive in their life, whatever that looks like to them. And I also work in an NHS referral service for more serious complex trauma. So lots of my work is around helping people to develop more emotional awareness, emotional management skills, and really be able to look at working on living in line with their values and taking action that means that they can build a rich and fulfilling life. And personally, I use a lot of positive psychology in my work. So that's all about how to thrive in life, or in my life, actually, rather than just my work. So, hence why we are here in the mountains and snowboarding. And I think that's probably all you need to know for the moment.
We are here having a lot of fun. You and I met doing a very scary activity, skiing the Vallée Blanche back in January, and we became firm friends pretty quickly. And like the emotions of the real world do translate into the investing world. You might be sat looking at your keyboard and you're like the graphs on your screen rather than like staring down a super steep mountain slope. But definitely, it can get the heart beating. And as an investor, your emotions can be very dangerous. Like Christoph, this is something you and I talk about a lot on this show.
Yes, and I would say what expert investors do that beginners don't do is they look at the crazy chaos and volatility as an opportunity rather than as something to fear and run away from or be inundated by. But to do that requires a significant shift in reframing of what volatility means.
So why don't we bring it on to some authentic clinical practice and clinical methodology, rather than you and I kind of making this stuff up as we've gone along over the last couple of years, Christoph. So, Zoe, as a psychologist, maybe just give us a bit of grounding. What are some of the most common emotional challenges that us humans face? And do you have a view on how they might compare to the challenges investors might face?
Well, yes. I mean, I think where you started was a good one, because you've reminded me of how scared I was, standing on the arête, going at the top of the Vallée Blanche, and walking along there. I'm feeling quite a lot of anxiety, right? So anxiety, fear is a very common emotional response. It's something that we all feel to one degree or another. And emotions are really an important part of being human. So there are reactions to what's happening in our lives, and they can have a big impact on how we experience our lives. So if we can manage our emotions, so on that day up there, you helped me definitely to manage mine, right? And then obviously you would hope that I have some tools to be able to do that myself. You can then have the experience of skiing the Vallée Blanche, which is the longest off-piste in the world, which was amazing, right? We had an amazing day, but they could have got the better of me. That fear and anxiety could have got the better of me. So whether you are doing that, or whether you are maybe taking some steps to invest for the first time, there's a level of fear, anxiety, stress, whatever you want to call it, that I would imagine comes up for people listening to your podcast as well.
And I suppose fear is one big emotion, but also in some ways, like greed and like the other side of the emotional spectrum can be just as dangerous as an investor.
Yeah, definitely. So there's a broad range of emotions, and I think we're going to break out my favorite feelings wheel at some point. But, some emotions are a lot easier to feel than others. So, for example, joy and optimism, right? Joy and optimism are easier for any of us to feel than, say, fear or embarrassment and nervousness. But they're all just emotions, and greed is also an emotion, but that can get that can be linked very closely to fear, because why do we feel greed? Why do we want to follow that drive to get more, which is what greed is all about, essentially? And that can often be driven by something like fear. So fear of not having enough, fear of lack, fear of scarcity, fear that something's going to be taken away, or comparison, somebody's better than us. So then we can start to have that greed drive kick in. So if that gets out of control, then that, I would imagine, is when it can be a real problem. But it can come from other things as well, like competitiveness, envy, wanting to emulate what others have, particularly around materialistic possessions, wanting a quick fix, wanting to make money quickly, I would imagine, in your world.
Zoe, can I backtrack for a second and ask you something about anxiety?
Of course.
Your framing of it. I don't know if Luke told you, but I have a side hobby writing about philosophy called Fire Philosophy, How to Live. And I was just yesterday reading some work by Heidegger, who speaks directly about what he thinks anxiety is. And he he says something like, it's an oppressive mood that comes from the way it prevents us from being absorbed in some activity.
Okay.
So instead of doing what we were born to do, somehow we're outside. We've anxiety kind of takes us out, and we spend all this energy kind of doing this thing instead of just being. How
Yeah.
does that map up with how you think about it?
Yeah, absolutely. So some level of anxiety is quite common, is quite natural and normal. So whenever we're stepping outside our comfort zone, or we're trying to do something different, we're going to feel a bit of fear. So whenever we're feeling some kind of threat, that's where anxiety comes from. And it's a very activating emotion. So we all know that feeling. We can feel it in our bodies, usually, in our stomachs, or, our breathing kind of comes up here. It's a very primal feeling, and it's all to do with the threat system. So absolutely, we are on high alert. The amygdala gets activated, so the primal system down in the brainstem. The amygdala gets activated, and we start to feel on high alert for what is the threat. And it depends on that level of threat as to how much we'll be able to stay in the present moment. So if the threat passes very quickly, if it's not something that we need to really worry about, we might just look up, oh, it's fine. And then we can come back to the present moment and we can be. But if that's something that really is, whether that's an enduring threat or it's something that is extremely serious, then we might have to really struggle to stay in the present moment. So again, speaking personally, when you're walking along the arête of the Vallée Blanche, it's really, I don't even know how to describe it. You're walking along a very small pathway, roped up to strangers, soon to be friends, but there's very steep drops either side of you. So you need to stay in the present moment, because you need to be able to manage that and go step, 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 step. But your anxiety is trying to get you to run back and take the lift back down again. So some people would be able to manage that and some people wouldn't. And that it depends on your level of skiing, actually, how comfortable you are in that situation as to whether you can manage it or not, and also how you feel about heights, etc. So I veered off a little bit, but does that answer your question a bit, Christoph?
And I guess, like anything, with practice and you develop a skill set and you become used to the fear. And ideally, we want to get ourselves to the place where we're the kind of master of our fear. But maybe before we go there and start talking about some of the tools and the methodology, like what's actually going on inside our heads. I know there's a book that you and I were chatting about by a chap called Steve Peters that explains in kind of interesting terms the different modes of thinking. Could you explain that for us, for our listeners?
Yes, Steve Peters is a really fantastic psychiatrist. He's the psychiatrist in the UK. So he's worked a lot with athletes, and he wrote the Chimp Paradox, which a lot of people have read a few years ago. And he's got a really fantastic new book out called A Path Through the Jungle. So still the same model. So he's created a model that works very well and is quite easy to explain he works a lot with organizations, but I think it's applicable to a lot of us, really. And he talks about the chimp brain. So the chimp brain is an emotional, impulsive, reactive part that we all have, right? So there's a chimp brain, and that's very much emotion focused. But then you've got the human part of the brain, which is wiser and thinks longer term. So I would imagine in terms of investment, the chimp is the one that you really need to manage, because that's the one that would be, getting panicky. That's the one that is wanting to do like short-term things and make things happen right now, and very, very impulsive and reactive. Whereas actually you want to be able to bring on board the human mind, or in other modes, we would call it the wise adult mind. And the wise adult mind is much calmer, is much more responsive, and is really can look at a long-term strategy rather than getting caught up in anxiety and fear and stress and worrying, which is the chimp brain. Biggest problem, I guess, though, is that the chimp hates uncertainty. And so that's where uncertainty activates the chimp. But of course, investment's all about uncertainty to a degree. So the more you can manage your chimp or your emotion-based mind, the better, I would imagine.
How insulted should I be? On a scale of 1 to 10, just hit me with a number.
0.
I mean, Christoph, I heard, because Zoe, on the podcast, Christoph is the monkey Piekarski and I'm Luke the Badger. So, I mean, what I clearly heard there is the wise human badger brain needs to manage this impulsive monkey in
Right,
control.
that's all he's doing all the time is just managing me.
Except you're a Zen monkey, right? So you throw all that theory out of the window. Yeah, but it's a really, I mean, I would advise I think it's a great book for us all to read, to be honest. Yeah, it's really a really interesting model that simplifies. He uses neuroscience, and it really simplifies all the neuroscience into something that we can all relate to. And certainly his new book, helps you to navigate lots of different life experiences and help. It's all based on trying to develop resilience and robustness, managing fear, managing stress, etc., which I think we can all benefit from, right?
So maybe if we now start to turn the conversation into thinking about the things that impact us and how we can start to do something about that. And maybe you can bring a bit of science to some of the nonsense that Christoph and I have been spouting over the last couple of years. We're all familiar with cognitive biases. And I wonder if you could bring a couple of those to life, particularly that investors should be aware of and how they might drive our chimp, our emotional responses.
So what might be helpful to talk about is something called cognitive distortions that we come across a lot. So if you've come across cognitive behavioral therapy, CBT, then cognitive distortions are a core part of that. So the idea being that we all have thoughts, right? We all are aware of that we all have thoughts, but that we can very quickly have thought patterns that are unhelpful and that can veer into, they're quite normal, but if we allow them to, if we don't notice them and we allow them to grow, then they can lead to some difficult feelings and problematic behaviors, and can lead to some clinical issues like anxiety and depression. They often appear in clinical practice. But ones that might be particularly relevant to investment are all or nothing thinking. So thinking, very black and white thinking, all or nothing thinking. So for example, everything always goes wrong for me. So it's either all good or it's all bad. And of course, the reality is that there's all this kind of colourful bit in the middle, usually. Or catastrophizing, so only seeing the worst in a situation. So at the moment, if everything is quite volatile, then we have a negativity bias in the brain and we will look for the negative. So we're looking for the negative stuff and then we're focusing on the negative stuff, and then it's all getting a bit catastrophic and it's the very worst situation, and oh my God, it's all going to go horrendously wrong and I'm going to lose everything. And that's when that feeds into panic, and that's when that feeds into, that can really affect how we feel. And then the other one might be should statements. I should have done that. I should have not listened to this person. I should have listened to this person. And we can really, really get caught up in that. And that, of course, leads to really difficult feelings, difficult, problematic behaviors, which we can all be prone to. But if they stick around, then we're in trouble. Is that relevant for your...
Yeah, absolutely. And really relevant right now. we had a really interesting conversation on our Patreon just in the last 24 hours because markets are kind of all over the place. And I think one of our Patreons was in that kind of catastrophizing mode and fearful that he'd made like some bad decisions. Things were looking great up until a few months ago, and now it all seems to be kind of going to shit. And a response I gave last night on the Patreon was, like, if you're a newer investor and this is your first, potential bear market, we don't honestly know if we're going into a bear market. Maybe things will be rosy later today, even because we're going to get some announcements from the Fed. If this is your first bear market, like, you're entitled to be terrified and fearful. And if it's the second time round, you're probably going to feel the pain of it still. I don't know, but you, Christoph, this is like my third or fourth merry-go-round. And like now I look forward to these points in the market because this is actually where you really make your long-term return by making wise decisions and responding to what's happening in the market, not kind of reacting and letting the chimp take over.
If I may add to that, Badger, that's exactly right. That's what I was alluding to earlier, that an experienced investor, because they've been around the block many times, when volatility arrives, they look forward to it because they see it as the natural process in the market, which is always cyclical. And obviously, it helps if you have a whole wheelbarrow full of cash on the side that you could actually take advantage of it. But even if you don't, then this is where I hate to drag in the world's greatest cliche of all time, but it's a cliche for a good reason. And I think it's that patience is the greatest virtue. In this case, I think it's something to do with when volatility arrives, you can either take advantage of it, as you were saying, right? It's something you look forward to, or you could draw on, if you've cultivated it over a lifetime of practice, draw on the patience that grounds you, helps ground you, and prevents you from doing impulsive reactive things. Without patience, or without this capacity to see in the long term for years where these kinds of fluctuations are merely blips, you will get eaten alive. So sorry to say again, to say the obvious, like, be more patient, but it's so core.
But there's something about listening to you saying that is coming from a very calm, wise place. So you can tell that you've been there before. You can tell that you know what you're talking about. You just like, be patient, be calm. There's something there that feels quite zen about that, as opposed to the panic of, oh my God, what's happening here? Hold on tight, and that's a very different feeling. And we've all been in both those places. If we're lucky, we've been in the calm place. But that's experience, that's wisdom, that's knowing how to handle it. And that's where it's so helpful for people to have more experienced investors who can give them that advice and who can help them to manage some of those cognitive distortions or even cognitive biases where, for example, confirmation bias, where people are looking for confirmation of how they feel. So if you're looking at confirmation of, it's okay, be patient, this has happened before, you're going to be in a very, very different place than if you're looking for confirmation of, oh my God, panic, this is terrible, I'm going to lose everything. So it's really important that people have wise elders to give them some sage advice.
And right. And as Badger was saying, one, it is experience. It's born of experience. So time in the market. And for us, it's like decades. But if you're at the beginning, you can't have it because
Mm-hmm.
time, you just need more of it. But I think the other thing is, when I hear something like patience, like be more patient, fine, sure, it sounds great. But you actually have to practice it. You have to cultivate it. It doesn't just fall from the tree somewhere, right? And I imagine this is what you help people do in your practice. Like, how does one practice being more patient? What are the most skillful tools we can give people? Because if it were easy, we'd all be, flourishing, eating bananas all day.
Yeah, it's a really good question. And do you know, I don't know that I've ever actually helped somebody specifically to cultivate patience as a but I think that happens. And I think it happens naturally because people who are very anxious are very activated and there's an urgency about it. Like something has to happen and it has to happen now. And that's the opposite of what we're talking about. So when you are regulated, when you're able to manage your emotions, you naturally calm everything down. So you're sympathetic, you're parasympathetic. So when we're anxious, our sympathetic nervous system is being activated. So that's why you can feel it in your entire body. It's a very activating emotion, you know, makes you want to go for a run quite often, or we're very, very busy and we're doing lots of things. And it's a whole body experience. Whereas actually when our parasympathetic nervous system is activated, so you think of a parachute, then we are much calmer in the body and mind. We're much more in that place where we're able to be patient, think there's no rush here. I've got time. There's not that same sense of urgency and it has to happen right now. So it's about regulation. And the more we're doing that over and over and over again, then we are cultivating that ability to be aware of ourselves and to be aware of what's happening in our mind and body. And that naturally, I think, contributes to patience, to things like self-discipline, self-awareness, self-management, patience, because we're able to look more in a long-term perspective. But I think that's a challenge for me, right?
And those disciplines apply just as much if you're worried you're going to miss out. So like I've had a number of folk on the Patreon and on social media saying, like, it's buy the dip. It's time to buy, you know, my stocks are down. If you've seen this story before, things could get way, way worse before they get better. We could be going into a period of multiple years, potentially, of recession, maybe, or stagnation. We've seen in the last, frankly, 2 or 3 months could just be the start. And so your comments on being self-aware and self-managing, I think, are really relevant when that kind of FOMO starts to hit an investor, because that can be an equally dangerous emotion to feel.
Yeah, absolutely. And I think, anything that cultivates self-awareness and self-regulation is really important for any of us, right? But that in therapy, that's what we're often trying to help people with. Because if you're aware of something, that's the first step to them being able to manage it or change it or whatever, for whatever that is. So if you're able to notice, so we often talk about like just notice your thoughts, notice what's happening, what are you feeling, notice what's happening in your body. And the more you can notice, the more you can manage it. So if it is that fear of missing out, I've got these thoughts that I have to do something and I have to do it now. And I'm reading all this information that's telling me, that's confirming that this is going to be terrible and I have to do it now. Then if you just become more aware of that and mindfulness, this is mindfulness in its purest form. So we talk about mindfulness, just being aware of what's happening without judgment. So in the present moment, what am I noticing? And that is essentially what mindfulness is. So just present moment awareness without judgment. So we can be aware of our thoughts, our feelings, our body sensations, our urges. And all those, that's really, really relevant for your listeners too, I think, really. So if they're having thoughts of, I'm missing out, I need to sell that now. Obviously, there's a lot of other things that are coming into to play there as to whether they do need to do that. But ideally, if there's some kind of long-term plan or they've got values, that they are focusing on so that they're not getting carried away, particularly like social media massively feeds into FOMO, a sense of lack, a sense of scarcity, what you're focusing on when you don't have rather than what you do have. That really, for any of us, that can really contribute to FOMO along with, envy that we've touched on before as well.
Zoë, going back to this concept of practice, how do you make this happen? I do want to pipe up and say that in the world of Zen Buddhism, and here we could bracket out it as a religion, but you could think of it for our purposes as something anybody can do without any preconceived notions, where you're literally doing the core of the practice is sitting and facing a blank wall, usually, while you remain while you keep your body upright and still. And if you do that for hours and hours, you end up training your body literally to not move. Think of like in an hour or two, you're going to think everything's itching and you have this temptation to scratch this, but you don't because you're training yourself not to. And then the blank wall is the thing that you realize because you know there's nothing there, but then all these thoughts are happening and you start dreaming of purple unicorns with glitter, and you and it becomes very, very clear what your mind is doing. That's so many projections. So it is a kind of thing I would say requires physical practice. That's something I think people, when they talk about mindfulness, I think because it's in the name, it points you like it's something you should be doing sort of with your mind. And obviously it's not that your mind is not involved, but it's the body that needs to sort of practice staying stable, and that affects things.
Yeah, there's so many different ways you can do it, and in different modes. I've practiced mindfulness and meditation for many years, and I'd still struggle to do what you're describing there. I may be a lightweight compared to that, but I think we can all get better. There's a spectrum there that we can all be working on. But you're absolutely spot on about the mind and body connection is so important in all of this. So in my clinical work, a big part of that, as I mentioned before, is about emotions, and all emotions come with a body sensation. And so often people get really removed from that. So we call it dissociated. So they get completely dissociated from what emotions they're feeling and where they're feeling it in their body. So a practice that we often do is just, noticing what you're feeling and noticing where you feel that in your body. So for example, anxiety, often people will feel it in their stomach, or they'll feel it in their chest, or there'll be tension across their temples or in their jaw. There's a bit of stress there. And we can all just get better at that. And you can just check in with yourself. You don't have to do anything formal. Or there's tools like Headspace is a really good kind of learning mindfulness, basic way of doing it. But there's a lot of misconceptions about mindfulness. There's a lot of different things. And on its basic form, it's just really noticing right now what's happening for me.
We had a really interesting discussion on a chairlift yesterday about this, where you were describing trying to define the feeling in some way, give it a shape, give it a color, place it
Do
in
you
your
want to
body.
do that now, Luke? You feeling brave?
Are you sure?
Yeah, should we do it now? Okay, let's do a little practice together. So this is what I would do, and this is what I do in my clinical practice, but it's also what I would do personally as well if I was starting to feel a bit of something and I'm not really sure, because we all feel things, right? If we're lucky. So if you notice your feet on the floor, if you can feel your feet on the floor, and just get that bit of a steady base. So sometimes I think of this like a tree. So these are the roots of the tree, and it's giving you that grounding base. And then as you come up your legs and your back, you can imagine like stacking your vertebrae of your back, and that's like the trunk of the tree, right? So this is the trees can withstand lots of weather, right? So lots of weather comes their way, but they've got this mostly got this steady, solid base, and that's what we're creating with the body. And by doing that, we end up opening up the chest, and that gives us more space for our breath. And the breath is really core for any mindfulness or regulation practices, because it helps to engage our vagus nerve and our parasympathetic nervous system and just calm us generally. So then we can just start to slow down the breath a little bit. So you can start to notice, like, where can you notice your breath? So some people notice it through their nose, their mouth, their chest. It doesn't really matter, but where can you notice it? And then just see if you can slow it down a little bit.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account.
Public is a FINRA-registered SIPC-insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description.
Wall Street Wildlife is brought to you by the Chit Chat Stocks podcast. That's right, another investing podcast you need to add to your listening rotation. My name is Brett, one of the hosts, and I produce 2 episodes weekly along with my co-host, Ryan Henderson. On the Chit Chat Stocks podcast, we talk a lot of stocks, from the hottest names to undiscovered gems, interviewing sector experts, studying super investors and why they are successful, and having a fun time while doing it. Follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts, and never miss an episode. That's the Chit Chat Stocks podcast.
I feel rooted. I can feel my breath in my nose. I'm feeling excitement because we're having an interesting conversation.
Great. Okay, so notice that excitement. So where can you feel it in your body? Can you know anywhere?
Here in my chest.
Okay, great. So where does it start and where does it finish, that feeling? That sense.
I feel like it's here and it wants to be out here somewhere. It wants to be bigger.
Brilliant. Okay, so what kind of shape is it?
Rectangular.
Rectangular. Okay, and how is it moving or is it still?
It's like pounding and trying to say, like, you want to swear some more, Luke, and you want to get more energetic on the podcast.
Okay, great. So it's coming with some thoughts as well.
Mm.
Yeah, so it's like pounding out. Is it got a color to it?
Orange.
Orange. Okay, so it's orange, it's pounding, it's like a rectangle. If it had a temperature, what temperature would it have?
Oh, it'd be very hot.
Hot. Okay, excellent.
Hot and passionate, yeah.
Okay, fantastic. So this is quite, how do you feel about this feeling, having done that?
Yeah, I feel like I understand it a bit better, having talked about it. Maybe it was just kind of there and now I'm much more consciously aware of it.
Yeah, you're aware of it. And obviously that's excitement, right? So that's a very different feeling to, for example, being stressed or anxious or overwhelmed. But it's exactly the same kind of practice. You're just noticing it. So you become the observer. You're the observer self. We're strengthening that observer self, but you're observing your emotions. You're observing your thoughts. You're observing that feeling and body sensation. And that's the basis of a lot of the practice that we do. And you can, if you do that over and over again, you're well on your way to becoming a master of your internal experience. Thank you for being willing to do that with me.
He's not just a badger, he's a guinea pig.
A pulsating, excitable guinea pig.
It is nice to acknowledge that I do have some emotions, because I say often to friends, I said to Zoe the other day, like I'm this kind of unemotional badger, like I'm such a master of my own emotions. I don't think I even really feel them. And maybe that's like somewhat more of a male character type, or more common in men. And I do wonder if we take a bit of a pivot in the conversation, and if we think about kind of investing character types, like if I look at our statistics for the podcast, we're like 95 or more percent male listeners. Now we want to foster our female listenership, and we've definitely got like a number of lady Patreons. So we welcome our female jungle cats and unicorns and all the other animals in our investing jungle. But why is it, do you think, that investors typically do tend to be male?
And Badger, if I may add one additional context to this piece, since we're both poker players, we notice the same thing, obviously, in the world of poker. So I think they're sort of analogous. I always wonder about this question repeatedly, because based on some maybe cliches or stereotypes, it almost seems I would expect the opposite. Because if I think of some classically female stereotypes of being more in tune with your emotions and more aware of like interconnectivity, then you would think those skills would help rather than hinder something like in investing. So yeah, so curious about your perspective on this.
I think it comes down to loss aversion and risk, really. So men, there's a large body of evidence that shows that men are more likely to undertake risky behaviors in general than women. So whether that's, skydiving or investing or riding motorcycles or whatever, men are generally more likely to take risk. And there's probably a few reasons for that from evolution and also from how we're socialized. There was a large study from the University of Bath in 2023, which was focused on risk behaviors around investing, and it showed that women were far less financially optimistic and more inclined to feel stronger loss aversion than men. So that meant that they were much more less likely to take risks. So they were much more worried about losing things than men, or losing their investments than men, and financially much less optimistic. So that's a really interesting paper to have a look at. But generally, there's just this higher tolerance of risk.
Risk is an interesting term because there is good and bad risk. Like if you take a bit like there's good and bad debt, taking on a loan, a mortgage to buy a house is good debt because ultimately you're buying an asset and you have to have somewhere to live. So you're, mitigating rent, and that may appreciate over time. But there's also like bad debt, like if you taking a loan from a loan shark and then going to the casino with it or doing something insane. And risk is the same. You can have a bad risk where you maybe you're about to walk down the arete of the Vallée Blanche and you're not roped up to anybody else and the wind's howling and it's just a day when you shouldn't be there. But there can be good risk as well that helps you kind of grow and gain experience when you try and do things a bit safely. So, whether you're male or female, are there any tools that, if we think about investing in particular, tools that we can use to maybe develop our willingness to take on more risk?
Yeah, so it's a really interesting point, and there's a classic kind of self-help book from the 70s, which is still one of my favorites, which is Feel the Fear and Do It Anyway. And that's all about this idea of just building up gradually your tolerance to being outside your comfort zone and taking risks in small ways. And I think that's a very good way to become more comfortable with risk, because each time you're having to manage and surf the wave of anxiety that will inevitably come up. So it would be exposure therapy in a clinical setting. So, for example, if someone was terrified of swimming, you wouldn't just take them and chuck them in the deep end anymore. I know they used to do that in the 70s. We don't do that anymore. What we would do is maybe just sit next to them, next to a pool with them, and just wait for that first wave of anxiety to pass and for them to recognize it's okay, I'm safe. Oh, and I've managed that. Oh, and now that feels quite good. And then we might move a little bit closer. And before you know it, we're dipping a foot in. And then we might have to go back a bit, and then we might have to go forward a bit. So, but each time we're moving further towards our goal, and we have a clear plan, and we are managing the risk and the anxiety that comes with being outside the comfort zone. So in an investing context, I would imagine, and please do correct me if I'm wrong, it would be about like starting small and building up and having a risk that feels manageable and is maybe outside your comfort zone, but is well thought through and then, once you've got that under your belt, then building up in a small way from that. And I think the other concept that's really helpful here is, again, a Zen Buddhist concept of beginner's mind. So this idea that if you start somewhere accepting you're a beginner. So I used to, be a skier, and I'm now a snowboarder. But when I started snowboarding, I went back to being a beginner. But I really, really enjoyed this concept of having a beginner's mind and learning again, being a learner again, and having that attitude of like openness, eagerness, lack of preconceptions, which is a beginner's mind. So you're open to learning. And again, that's where having people who will guide you along the way. So in snowboarding, having good instructors that you trust. In your world, having good advice, that really helps you to make those little steps that then mean that you get a long way quite quickly, usually.
Right, because the flip side to the beginner is the expert. And in this context, the expert is somebody who, almost by definition, what makes them an expert is that they see things through a very, very narrow lens. And it kind of makes you more rigid in that sense. because the things that make you an expert, you're filtering out so much other stuff. And as we know in investing, uncertainty, doubt, things change all the time. So that expert mind is a little bit less flexible. And that's why cultivating this openness is so, this quality I think you're talking about, learning and being a beginner. And the paradox, though, of course, is that you could be an expert while still allowing yourself to continue to be a beginner and to continue to learn. That's kind of the top level, that you're not naive. It's not like you don't know anything, but you do know a lot, but you still haven't calcified yourself.
Yeah, I think that's a really lovely way of putting it. And I think as as you become more of an expert in anything, you know what's important and what's not. You can filter out the noise, and you can stay quite steady in what you know to be true, but having that open mind to still learning. So there's a psychiatrist called Paul Conti who calls that the generative drive. So the generative drive is this drive to keep on growing, keep on learning. And that is something that a lot of very successful people have. They want to know more. Although they are an expert, they're still looking for ways to develop and to learn and to grow.
Badger, I want to toss an idea your way as a kind of thought experiment. Remember our investing for parents and children episode? If you haven't, if you haven't heard that episode, by the way, dear audience and listeners, go back, because we think it's one of the best things we've recorded. But I think one of the things we were talking about there is it's better to just get started, and it doesn't really matter the amount, but develop the habit. And I think that applies a little bit here. Like, it, instead of thinking of investing as you need $10,000 or $100,000 or whatever number that stands in for big, what if you took some amount of money that still represents something, right? It can't be nothing. It can't be $5, because your mind would know $5 isn't really real or big enough. But what would happen if you took some amount that represents something legit, and you opened up your portfolio, and Zoe, like you were saying, you practice with that, so that even if it went to zero, nothing, your life doesn't blow up, but you at least start this journey. Is that something, Badger, you think is something we could recommend as a step one into this?
Wholeheartedly. And reflecting back on something we said earlier in the conversation, you are a beginner when you start and you gain experience. And then when it is your 20th year as an investor, you've kind of seen it all before. And it's a bit, maybe to reflect on poker as well. Like, you can't play the game of poker unless there is something at risk. Otherwise, it's just like, oh, you show me your cards, I'll show you mine, and we'll see who had the biggest hand, and then we'll deal them out again. It's kind of meaningless. We're just there to socialize. And you've got to feel the emotions. And if you've made a mistake, you've got to feel the pain, because that pain is the thing that teaches you. And so if you can get that journey started as soon as possible, like we say, the best time to start investing was 20 years ago. The second best time is today. If you get started today with a small but meaningful amount of money, and if you suffer through this downturn that's coming, you're going to learn such valuable lessons about not just like the mechanics of investing and why a particular stock may be underperformed, but also your emotional response to that, so you can grow. And then later, when the money is more material, you've made those mistakes and you've learned those lessons when it didn't matter so much and you recovered, or you've maybe had some success and you've got some grounding to build on as the money becomes more important.
And you're reminding me there of Atomic Habits. I don't know if you've read it. I think I've got it. I have got it here. The James Clear book. I don't know if you've read it. It's good, right? It's an interesting book and it just builds on that kind of firmly based in science, but builds on those kind of strategies with small habits, building small good habits gradually over time, and just adding to them in ways that work for you. And you can apply that to lots of different domains of your life. But that breeds self-discipline. It breeds this sense of self-efficacy, of knowing that you can do things, you can have self-control. You've got this sense of agency, of knowing that you can make things happen. So definitely in terms of investing, what you're talking about, but you can apply it to lots of other areas of your life as well, just building on little things gradually. And it helps tremendously over time.
So here's the most practical way of condensing a lot of, I think, what we just said. If you're listening to the show right now and you're not an investor, pause. Just pause will be step one. Consider whether it might be meaningful for you in your life to, over time, have more money, or what or whether you have plenty, so you don't need to worry about that. But if you do, then it's so easy to open up a brokerage. It's easier than ever before. Consider what amount of money would represent the sweet spot of small but meaningful enough, and then deposit that money, open up the account, and then listen to our show every single week, because we're guides and you ask us questions. Hop on our Patreon, join our community, and all of a sudden you have all the tools to start your journey on a lifelong wealth building enterprise. It's almost like, what am I missing, Badger?
No, you've got it. We said it before, right? It's good to go on this journey with a buddy, whether it's like a personal friend and you're both kind of co-investing. And that's what I did 20 something years ago with my friend Albert. Now, we both found we had a passion for this topic, and we found it as an interesting way to try and understand the world and think about the future. So we just started sharing ideas, and we were both kind of investing in parallel. We turned it into a bit of a game, and it's now turned into both of us essentially semi-retiring. If you don't have a buddy who's got that same kind of niche interest, there's still ways to become part of this community. There's a whole bunch of podcasts out there. I happen to like our one. I think we do a pretty good job of trying to be authentic and give, not just the pump and dump and the meme stock rubbish that you're going to find everywhere. We try and share like our combined 45 something years of wisdom and draw out lessons. And then, go find us on Twitter, go find us on the Patreon and have those conversations. In prep for today's conversation with Zoe, I posted a question to the Patreon to say, we've got a chartered clinical psychologist coming on to chat about emotions as an investor. Share some questions, share some of your thoughts, and we'll try and get Zoe to opine on them. I mean, maybe I can just sort of pop in and raise a couple of those, because they do raise interesting points. Our Patreon Sam said one of his biggest issues is feeling he's not deploying all of his cash at the first sign of a market downturn and remaining patient. And he feels like he needs to have a habit, or he has a habit currently, of rushing in after a small drop and then not having much left over if it gets bad. Well, that's that, the FOMO, things are on sale. Well, actually, they may not be on sale yet. They might really be on sale in 6 months or a year's time.
What's really good here, though, for Sam to notice, he's noticing his habit, right? He's noticing his behavior and his urges. And that's the first thing. He's noticing that pattern. So there's a real parallel between our work, right? Because you've got to look for patterns. So we all have patterns in our behaviors, and we also have patterns, there's patterns in the market. So that's the really good thing to notice, and not to throw that out, is he's becoming more aware of his patterns, and that will stand in for really good stead later down the line. So because once you're aware of it, he'll be able to notice, well, do I want to keep this rushing in, or do I want to change it? And how do I want to change it? What would be more useful? And that's where your expertise will come in. Well, what's a better strategy than that? And then Sam can develop that strategy, have a plan based on that strategy, and then he's going to have to manage his emotions when the same urge comes up, because it will, right? Because that's his pattern. But patterns can be changed. In human, you have much more agency over your own patterns than you do over the markets. That's the good thing.
There's another question we got from our patrons, and this is, I love this one. He says, my wife tells me, is telling me to sell our stocks, and he likes sleeping well at night and still waking up in the morning. So for many people, investing is a joint affair.
Mm.
How would you counsel, I suppose, investors that are not fully in control of these decisions,
Mm.
but have to negotiate,
Mm.
let's say, family unit?
Yeah, absolutely. And this comes down to values, I think, and what's important. And, really thinking through, and this will be different for different people, but what is important here? So, this is about, I'm not a couples counselor, right? But this is about communication, isn't it? And making sure that you're on the same page in terms of what's happening and communicating about, well, this is why I'm doing it. And here's the values for why I'm trying to build something for our future. And this is my strategy behind it. So sometimes that can help, of just being a little bit more open, a little bit more communicating more clearly. But it does come down to values, because there will be a point at which somebody will value family, will maybe tip the balance. So somebody who doesn't have a wife who's saying those things may, be able to hold out longer than somebody who's getting a lot of pressure at home and it's causing a lot of fights. It may be that actually they do need to value that family more, but that's a personal choice, right? But again, it's being aware and it's being conscious, and not just kind of sleepwalking into something and then feeling resentful because feeling like you're being forced to do something. Then your locus of control is being put at external. It's blaming my wife or blaming external markets for what's happening here. And you want to be really thinking about being very conscious about why you're making decisions and what's happening for you, and having that sort of internal locus of control that you have agency over that. But that comes down to a personal choice of who, what do you want? What values do you have? And again, we're back to risk, I think, there too. Does that answer your question, Christoph?
Yeah, thanks.
So we've explored like a whole bunch of tools that investors can use. And one thing you and I were chatting about the other day, Zoe, was the benefit of having a plan. And I think I said, at times like this, I feel like I'm a master of my emotions if, when something happens in the market, I can respond to it rather than reacting to it and doing something very quickly. And so I wonder if you have any thoughts on like the benefits of having a plan and having some foresight and being quite diligent and structured about the actions you're proposing to take.
Yeah, absolutely. Well, I think, going back to Steve Peters' work and the Chimp Paradox, he would say the chimp likes a plan, right? The chimp likes to have a bit of a, make a bit of noise and let the emotions out. But then it's like, well, what's the plan here? You need to have a plan to be able to move forward. And plans, I think, are really important because they help you, usually for when you're in a wise, calm mind, to think about your values, think about why you're doing something, and feel like you know where you're going, and decisions that are thought through sensibly and according to the data. It's not from a hot mind place, it's from a cool mind. We're looking at the data, we're deciding a strategy, and the plan allows us to stick to it. So I think that creates resilience. It protects you against, shocks and emotion-based thinking based on, oh my God, what's happened overnight? That can be really stressful if you're getting buffeted around by that. So keeps you in that wise mind place. But I guess, and I'll defer to you here, I guess it's important to have a plan that allows for some flexibility and some adjustment along the way, perhaps, rather than being too rigidly stuck in it. I don't know.
That's exactly right. And I've talked about it in previous episodes, but something I try and be diligent about is if there's something I want to do, like maybe I'm thinking about buying something or selling something or trimming, doing some portfolio action, I'll try not to do that straight away. I'll literally put it in a to-do list, and then I'll just come back and reflect on it. And sometimes it will still seem like a good idea after it's been cogitating for a month, and I'll act on it. And sometimes I'll realize maybe that was an emotionally driven decision, or maybe things changed, the context changed a little bit, and that's no longer the right thing to do, but just forcing myself to take a breath. So I suppose it's another kind of plan, right? It's sort of, mapping out the things we might do, but then giving ourselves to reflect on them before we snap into action?
That's something we just did together on our podcast / Patreon. I wanted to buy more of a particular company, and I said, wait, let me take advantage of somebody that I trust around these decisions. So we talked about this on our podcast. We made a poll on our Patreon page, right? Just the process, just that process, I can vouch with 100% truthfulness and honesty, feels good. Because as long as you trust the people, which, that's a given, I suppose, between Luke and myself and our community, it's not even so much about the endpoint decision. It's that I took the correct steps and noticed that there's a complex decision to be made.
And the most incredible thing there was you actually took our advice, which I was shocked about.
Can you believe it?
So Zoe, this has been a fascinating conversation, and we should probably think about bringing it to a close. But before we do, if an investor is feeling a bit overwhelmed, and maybe particularly right now they might have felt they've made a few mistakes, maybe their portfolio has suffered. Is there any advice you'd have for them?
Good question. So I think the first thing is to probably give some space to how they're feeling, right? So really, and there's different ways you can do that. So you can use something like, there's a feelings wheel that is one of my favorite things, where we call it name it to tame it. So it is based in science. So when you're feeling very overwhelmed, when you're feeling very stressed, if you can name that feeling, it actually brings back on board the thinking parts of your brain, and you're just naming it. So I'm feeling overwhelmed. What else? Stressed. I'm feeling anxious. I'm feeling worried. And just naming it to tame it can really help to settle things down. The other thing you can do is write it out. So again, going back to what you were saying before about not acting on it straight away. So you might be having this urge to adjust things, but really you wanting to just come from a cool mind place. So you need to give that hot stuff a bit of space. So giving it a bit of space by naming it to taming it, by writing it out, by doing that bit of practice that we did earlier about, what am I feeling? Where am I feeling in my body? Going for a walk, doing all the things that help you to be a little bit less stressed. Because if we're reducing our stress, we've got more space to respond rather than react. And I think what's really important, and that's come out from your conversation, is having people you can speak to about this stuff. Because if it's all in your head, it tends to just get pretty overwhelming pretty quickly. We all need people that we can speak to if we're feeling stressed or we're feeling worried about something. And in the investment space, you need to speak to people who have been no point really in coming to speak to me. I could help you with your emotional reaction to it. But if you're looking for advice, you need to come and speak to people who know about that. And that would be people in your community. So being able to get some of that wiser, more sage advice would be a sensible step forward, rather than just running around with that and then thinking about, right, what do you want to do with this? Then you've got some decisions to be made. But you've already talked about how you might go about making a decision from that wise mind place, which is what we're all seeking to come back to all the time, including myself.
Wonderful. Zoe, are there any specific resources you'd like to point our listeners to?
So I think that probably the Steve Peters books, seeing as we've talked about them quite a lot, the Steve Peters books, so Chimp Paradox, and also the his latest one, which is, I think, better, which is Path Through the Jungle. That would be really good. We mentioned Atomic Habits as a book as well to try and cultivate some good habits. There's some audios on my website if anybody's interested in getting some more mindfulness audios. So that's just zoeross.com. ROSS is my surname.com. And I am inspired by you. I am revitalizing my own podcast. So I have a podcast called the Mental Wellbeing Podcast that has lain dormant for a while. So I am going to get that back underway. So if anyone's interested in learning more, then you will find that again on my website. And then there's quite a few apps around mindfulness. So Headspace is a good place to start on that one, would be my other recommendation.
That's some really good practical advice that is very timely right now. Like, who knows what the future holds, but maybe by reflecting on some of the practices and the things we talked about today, whether it's more chaos or we can return to stability, we'll at least be mindful investors and act a bit more structured with a plan diligently, and hopefully with friends in the Wall Street Wildlife Patreon community or on X. You can find Christoph and I all over the social networks. And if you do want to talk non-investing, if you do want to talk about like just getting control of your emotions, then yeah, absolutely go check out Zoe's material at zoeross.com. And we'll put a link to all of that in the show notes today.
What a pleasure it was speaking with you, Zoe. Help me in the future deal with this with this badger guinea pig amalgam that I'm dealing with. It would be wonderful to follow up in as the years and months unfold. So consider yourself our doors open to you.
Oh, thank you so much. Yeah, likewise, it's been an absolute pleasure. Thanks very much for the invitation. It's been great to speak to you both.
Fabulous. Well, this has been Wall Street Wildlife. I hope you enjoyed this week's episode. We always end with this question. Are you ready to become a beast of an investor?
Your journey starts here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.